Adding fuel to the fire today for maybe getting off the fence and deciding to at least shop around is the St. Louis Fed president, James Bullard, who was talking to our own Peter Barnes on this very subject, the likelihood of raising interest rates by September better than 50%. Now, keep in mind, if that is the environment in which we're working in and you are looking to get a home and you're afraid the rates are going to go up, well, you don't have to be a rocket scientist to know you better get in a rocket and purchase that home fast. Former Fannie Mae executive Tim Rood, who sees that apartment construction and rent prices are part of this trend. Explain how they're figuring into this, Tim.
Sure. Hi, Neil. Thanks for having me. So there's a couple of things going on in the housing market. As we already noticed, you've got a bunch of people that don't want to sell or can't sell. There are probably 10+ million people who don't have enough equity or insufficient equity to actually sell and then buy, cover the transaction costs. What you're seeing now is builders, they're focused on building. Of course, they're trying to bring back that supply chain that was so broken during the housing crisis, but they're focusing on multifamily. They're looking at apartments. That's where they see the demand. And what happens, that kills the starter homes. They're not investing in the starter home inventory and building those things. So all of the energy and all the enthusiasm is going around renting, building apartments, and then serving the rental community.
So what does all of this mean? Does that mean that these act as impediments to housing or could fuel it?
Well, the problem is that there's no inventory on the single family side of the house. So even if you were inclined to go out and buy, there's not a lot of inventory. You're seeing these hot markets. 8 out of the 10 markets that the Wall Street Journal talks about, these are all in California. These are unicorns. You're not going to see millennials have a chance getting into those markets. But then you see other more normal markets, Atlanta, Des Moines, Denver, things like this, or Dallas. Those are based on great fundamentals. You've got strong employment, strong economies, starter prices that you can afford.
Do you think that could be the problem for the duration of the housing recovery? Let's say that's what's going on here, albeit a tepid one. That if the starter market is adversely affected, especially in these once hot cities, then you really can't get much follow through if it's just the mid and higher range.
Yeah, the housing market works on ladders. You're going to have a startup buyer that then moves up, that frees up that inventory for the person who's selling to go and buy up. And then it becomes this virtuous cycle all the way up to people retiring and downsizing and things like that. If you can't achieve that, to satisfy that startup buyer because they can't save enough money for their down payment because they're paying too much in rents, or the inventory isn't there or isn't that desirable, the whole thing breaks down.
But what is this notion, and another Fed president indicating today, telling our Peter Barnes, September, more than 50% likely we will see a rate hike then. How does that affect buyers' behavior? Do they feel, well, gee, I better get off the fence now, even if there's limited supply, that this is my moment, and if I ignore it, I'm in deep trouble?
There's no doubt that people who have the ability are going to look at the potential for a rate increase as kicking them off the fence. That I was thinking about it. I can't ever pick the bottom in a housing market, but there aren't many opportunities afforded to a buyer to get in.
Well, then do you like housing the way it is now, Tim? Would you, let's say you're talking to a young couple and they don't know what to do, but they are believing that this time they should do something. What do you tell them?
For 100 years, there's been a direct correlation between home ownership rates and income growth and wealth appreciation. Those things haven't changed, notwithstanding the housing crisis. Absolutely. Anybody who has the opportunity to purchase a house in a good market, the hot markets right now are all of the walkable amenities, they're transit-oriented, these sorts of urban communities. And I think, you're not going to be afforded many other wealth creation opportunities like home ownership. The cautionary tales behind us, the future is bright.
All right. Tim, thank you very, very much.